Hello, this is Dean Malone with Compass FX. I hope you're doing well today and you get some good trades. I want to keep on the topic of keeping it simple. Keeping your trading simple, oftentimes we get wrapped up into some complex trading strategies when really some of the most basic elements of the marketplace can yield pips. We had an opportunity over Sunday night, Monday morning, whichever it is it may be for you, when the market opened up. We had what we refer to as a gap open. That's when the market opens up and gaps away from the close of last week, and it leaves literally a gap in price, and we can see it here pretty clearly in the dollar yen. So the week closed right here, and then when we opened up, this is the weekly open, we opened up, we made a gap up above, and this literally jumped from about the 103.85 area up to about the 104.25 area. That's a pretty healthy pop up of about a 40 pip pop to the upside. Now, keeping it simple, one of the most basic techniques with trading a gap is to look for the market to fill the gap. Basically, you're looking for the market to pull back to where it started at. We had a number of currency pairs today that filled the gap except for two of the majors. And so we'll keep an eye to see if those two major pairs will fill the gap a little bit later in the week. So let's go through this. Again, the yen closed, opened up, and we had a gap of about 40 pips. And you can see here it kind of bounced around a little bit during the Asian session, but then finally it moved back down, and through the European session moved back down, and then kind of now taking a bounce and moving back to the upside a bit. The dollar CAD, it too, we can see here from the open it gapped up, and this time not as much of a gap, about 20-25 pips, but again what we look to do is we look for the market to roll over back towards where the market closed and fill in the gap, and sure enough it did that and then worked away. The dollar Swiss, exactly the same thing here that we saw in the dollar yen. We had a close in this area around the 91.35 area, and then we gapped up about 40 pips, making a move up to about that 91.75 area, and then it has almost filled the gap, got pretty close to filling the gap within a few points, maybe about 5-6 points of doing that, and starting to make a little bit of move off of that. And we can see here that the pound did the same thing, and it pounded pretty nicely as far as a very clean gap fill through the night. It had probably the cleanest look by just one nice easy move to the upside. Now the UK banks were closed for summer bank holiday, but still a nice easy move all the way back, and then as it got back to the close of last week, the open of this week, then we saw the market kind of bounce around a little bit and then start to push away. Now the two pairs that I'm going to make note of here is the euro dollar. You can see that from the close of last week where it opened up at, it gapped, and we made a pretty strong gap down from about 32.40 to about the 31.90, 31.85 area, another healthy gap to the downside, nearly 60 pips there, and just haven't seen the market really do much. Some have been expecting the market to push back towards 32.40, 32.50. There's still offers in the market up in this area. So a lot of traders right now are looking to sell the rally, but still there's a lot of pressure to the downside based upon Draghi's comments. And I think part of what took place over the weekend is Draghi's comments on late Friday out of Jackson Hole, making comments regarding the weakness in the Eurozone economy and the fact that they may be doing some additional easing in the way of long-term refinance operations. So anyway, there might be the possibility to see this fill the gap back towards these lows or all the way back towards the weekly open here, right around that 32.40 area. And then the Kiwi dollar did pretty much the same thing here. We saw a pretty strong gap down, and it moved from about the right around 84 down to about the 83.45 area and pushed back a little bit, but not near as what some had been expecting today. So watch for these scenarios in the marketplace. Anytime you see the market open up and then literally gap away from the open or the close of last week, and this literally marks pretty much the close of last week, it gaps away from that, look for the market to come back and fill it. This is a very simple process. You just gotta hang in there, wait for the turn, and then trade it, and you're looking for the move back to the gap. So in this case, we've seen this 1 complete, 2 complete all the way back, 3 almost all the way back. The pound completes all the way back. The Aussie dollar, by the way, completed all the way back, and just leaving us 2 dollar-based currency pairs today, showing that they haven't made a retracement back to fill the gap. So what traders are going to be looking for is the opportunity to fill the gap. Now, I'm more inclined to see that the Kiwi dollar fill the gap, since it is the highest interest-bearing currency in the world right now at 3.5%. We could see a double bottom type setup, and if we see any potential movement that would suggest some strength in the Kiwi, then I would look for the Kiwi to potentially bounce back and head back towards that 84 mark where we left off last week. Well, this is Dean Malone with Compass FX. Hope some of this information about trading the gap, looking for the market to fill the distance that it gaps, will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.